Okay, let's dive right in. There's a massive battle brewing in the Supreme Court over presidential power, and honestly, the outcome could send some serious shockwaves through the market. So today, we're going to break down exactly what's at stake, how it's influencing Bitcoin's strategy, and the other major pressures you need to be watching.
So what's the big deal? Well, the biggest story right now is a major legal challenge that could literally unravel one of the most significant economic policies we've seen in the last decade.
All right, so yesterday, the Supreme Court heard arguments on whether these sweeping global tariffs are even legal. And believe me, the justices' reactions are already sending signals all through the market. The whole case really boils down to this one simple question. Does a law from back in 1977 about national emergencies actually give a president the power to impose billions of dollars in tariffs? The administration says, yes, absolutely. But the challengers are saying, no way. That's basically creating a tax, and only Congress has the power to do that.
Now this is where it gets really interesting. This quote is from the Chief Justice himself. He didn't frame this as some sort of trade tool, he flat out called it a tax on Americans. And by doing that, he's directly questioning its entire constitutional foundation. That's a huge signal coming from the very top of the court.
And look, it wasn't just him. The skepticism was coming from all sides. You had justices asking, is this really a national emergency? Justice Sotomayor even brought up a pretty wild example of using a 10% tariff on Canada just because of a TV ad. You know, it kind of undermines the whole national emergency argument, right?
So we're not going to get an official decision until January, but you better believe the market isn't waiting around. This kind of high-stakes legal drama is exactly what spooks investors. With the fate of billions in tariffs just hanging in the balance, it's no surprise people are hedging their bets and looking for a clear strategy in other assets.
Which brings us right to our next section, a strategy for Bitcoin amid uncertainty. With all this political and legal chaos, analysts are laying out some pretty clear game plans for crypto investors.
So what are the big players saying? Well, analysts over at Standard Chartered are basically saying, look, for the whole crypto world to do well, Bitcoin has to hold certain key levels. They're watching three big things. The 50-week moving average, to gauge the long-term trend. Then there's the Bitcoin to gold ratio to see how it's stacking up against a classic safe haven. And, of course, ETF flows to see where all that big institutional money is headed.
So here's their game plan, and it's not some all-in or all-out gamble. It's way more disciplined. Step 1. They say buy about a quarter of your total planned amount now, especially if you see a dip below 100K. Step 2. Buy another quarter if, and only if, the price closes above 103K on Friday. That's a huge technical level. And then for the final 50%, you wait until Bitcoin shows real strength against gold. See, it's a structured approach for a very volatile market.
Okay, let's zoom out a bit. Let's leave the courtroom in crypto for a second and get a pulse on the wider market, because there are a lot of competing signals out there.
And this chart tells a really conflicting story. You've got money coming into a bunch of the smaller funds, which is great. But then you have this one massive outflow from BlackRock's ETF, which is the biggest one out there. And that one move was enough to drag the entire day into negative territory. It just goes to show you how much influence the biggest players have.
And check out this number, $20 trillion. That is the new record high for U.S. household debt. I mean, that's just a mind-boggling figure. And it points to some serious underlying strain on the average consumer, who, is the backbone of the economy.
It's not just consumers either. The pros are getting nervous too. The Goldman Sachs Daily Sentiment Index has just plunged to a 16-month low. And when the so-called smart money gets this cautious, it's basically a flashing red light reflecting all the uncertainty we've been talking about. So that nervousness isn't just about debt or ETF flows, it's also being fueled by a major political risk that continues to loom over the entire economy. Of course, we're talking about the government shutdown. It has now officially become the longest in U.S. history, which is not great. But for the first time in a while, it feels like we're seeing some glimmers of hope. Key figures are now actively pushing for a deal, and the political pressure might finally be enough to end the gridlock.
Okay, so that was a lot to take in. Let's distill all of these moving parts into the most important takeaways for you.
All right, so here's the bottom line. First, the Supreme Court seems really skeptical about the legal basis for these tariffs. Second, Bitcoin bounced off a key level, but the advice is to be strategic, not reckless. Third, those huge ETF outflows combined with record household debt, yep, that's a clear signal of stress in the financial system.
And finally, the government shutdown is still a major risk, but maybe, just maybe, an end is in sight.
This really leaves us with the big question, right? Is it politics or is it economics that's going to decide where the market goes from here? Honestly, as we watch all of this unfold, it really feels like the political developments from the courtroom to Congress are the ones holding the most sway right now.
If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. See you next time.